Welcome back to the Malaysia Money Matters show. It's June 20th, 2025. Today, we're taking a deep dive into the latest financial news, both here in Malaysia and globally. We want to help you stay informed on what's shaping the markets and, well, your money.
That's right. We've got quite a bit to unpack today, actually. Things like corporate earnings, central bank moves, and those ongoing geopolitical tensions. The goal really is to cut through the noise, highlight what truly matters for your understanding.
Okay, let's kick things off with some Malaysian company news. Scientex first. Analysts have cut earnings forecasts. What's happening there?
Well, their packaging segment seems to have hit some pretty serious headwinds. Global competition, inflation, those kinds of pressures. And that led to lower third-quarter profits, down to RM 123.9 million. So that's definitely hit the forecasts.
But I heard there's maybe a silver lining, something about their property division.
Exactly. Yeah, there's still quite a bit of optimism for their property segment. Looks like it's on track to meet its RM 2 billion launch target for FY 2025. So it really shows a kind of mixed picture. Strength in property is helping offset those challenges in packaging.
Right, diversification paying off there.
Yeah.
Okay, moving on to Astro Malaysia Holdings. They reported a 21% drop in first quarter earnings. That sounds significant.
It is, yeah. Net profit fell to RM 13.48 million, and revenue was down about 9%. A lot of this seems tied to, well, the broader economic headwinds we're seeing. It particularly hits things like advertising spending.
So how are they planning to tackle that?
Their strategy seems to be doubling down on local content, investing more there, and also offering more affordable subscription options, trying to play to their strengths in local programming.
Makes sense. Now, here's a big one, PPB Group. Shares fell to a 16-year low. What caused such a sharp drop?
Yes, that was triggered by news concerning its associate, Wilmar International. Apparently, Wilmar had to place a very large security deposit, something like US $729 million, with Indonesia's Attorney General office. It's related to some corruption charges.
Wow. And Wilmar is a big deal for PPB's profits.
A key contributor, yes. So this development, it significantly raises the risk premium for PPB's stock. Investors are just seeing more uncertainty there now.
Understood. Let's shift gears to healthcare. There's talk of a proposed DRG payment model for hospitals. Diagnosis-related group? How might that affect operators like IHH and KPJ?
Right, the DRG model. Basically, hospitals would get a fixed payment per diagnosis instead of billing for every single service. Long term, it's generally seen as structurally negative for private hospital operators. Could definitely pressure their margins.
But not immediately.
Probably not a huge impact right away. The initial rollout is expected to focus on, let's say, lower value cases. But it does signal a big future shift in how healthcare is financed here. And it's worth noting KPJ might be more exposed given how much of their revenue comes from Malaysian operations.
Okay, something to watch. Let's turn to some positive local news, though. Malaysia's forex reserves are up.
Yes, quite positive. Net foreign exchange reserves hit a 3-year high of US $94.7 billion at the end of April. This increase was helped by strong foreign inflows into our local bonds and a weaker U.S. dollar globally. It really strengthens Malaysia's defenses against market volatility and helps the ringgit stability. In fact, it's made the ringgit the top performer in Southeast Asia this quarter, just after the Singapore dollar.
Good to hear. Now let's look internationally. The Middle East conflict between Israel and Iran keeps escalating, pushing oil prices up.
Indeed. Brent crude futures have been rising, and you had Shell's CEO warning about a potentially huge impact on global trade if the Strait of Hormuz gets blocked.
That's a major choke point, isn't it?
Huge. But a quarter of the world's oil trade goes through there. So yeah, these ongoing tensions create significant geopolitical risk for global energy supplies. Big uncertainty.
And what about central banks globally? The U.S. Fed held rates steady. Any nuances there?
Well, they did hold rates, yes. Officials are still sort of penciling in 2 cuts for 2025. But the new projections show a growing divide, actually, especially with concerns about how President Trump's proposed tariffs might impact the economy. So less consensus than before.
Interesting. And elsewhere?
The Bank of England also held rates, mainly citing risks from a weaker labor market and high energy prices. But in contrast, you had the Swiss National Bank cutting its interest rate again, down to 0 now, trying to stop the Swiss franc from getting too strong. Shows how different the situations are globally.
Divergent paths, clearly. We also heard the UN Trade Agency warning about global foreign direct investment falling again.
Yes, for the 2nd year running in 2024. And they think 2025 could be even worse, mainly because of rising trade tensions. They called this uncertainty poison for investor confidence. Companies are focusing on short-term risk, not long-term investment that creates jobs. It's a drag on global growth.
Concerning. And finally, a subtle trend. Foreign central banks reducing their holdings of U.S. assets. What should we make of that?
It's quite notable, actually. Their holdings of U.S. Treasuries and other securities held at the New York Fed have dropped to their lowest level since 2017. It suggests a quiet, perhaps strategic move to diversify away from U.S. dollar holdings, maybe hedging against U.S. policies or just future shifts. It's a slow burn, but significant for global finance long-term.
So wrapping this all up, it's clear the interplay between company performance here, national policies, and these big global shifts keeps reshaping things, often unpredictably.
Absolutely. Which really brings up an important question for you, the listener. How do all these intertwining factors, from local earnings challenges like we saw with Scientex and Astro, to these global trade tensions and oil price risks, how do they influence your personal financial decisions or your outlook?
Definitely something to reflect on. What's one area you'll be keeping a closer eye on after our discussion today? For more deep dives like this one, please make sure to subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.